Good morning, everyone, and welcome to the European crossover webinar. And we're starting out not too far away from where we saw Friday's close as far as equity futures. The only thing I am looking at here is that we've been bumping up against the top of this range, and we finally got a bit of a look above. Yet we're starting to pull back towards that, and we're actually pulling back within that range in the S&P. Not a whole lot, but we might end up seeing this market have to pull back to find value if we're not able to go in and sustain this move above this area, because it's been such a strong move here. So we did go in and bounce back from Friday's NFP here. Actually a little bit more pronounced in the NASDAQ, but we still did in the S&P. Yet we're struggling to stay above this area here. So if we're not able to sustain that, then we may see ourselves start to go in and pull back to find some value before buyers will step back in. So we'll see whether or not that plays itself out or not. That we'll start to see those answers, but those won't be until the beginning of the open of the U.S. equity session, cash equity session. Taking a look at gold. Gold, as I keep cautioning, I just think it's a fake out for the most part. And you can see here, we ran up here, and I keep saying, unless we get above 1865, I just think it doesn't mean anything. And I remember this is that area back that they had previously come up to, you see here, and we failed. So essentially we're just falling right back again. Not completely, but once again, we're still kind of sliding back here. And we'll take a look at where we stand with the crude oil. The crude oil had poked its head above and was challenging between the $70 to $71 area, just basically in the mid area, 70, well, here 70.60 and almost 70.50. And we've slid back again here. We're back in that range. We've talked about that key 69.55 area. So we've fallen right back into that, dipped below it, and we're just traversing right now between that pivot that we had, which is much lower, but that pivot of 67.95 and 69.55. Take a look what we have as far as economic data for today. From what I see is there's nothing in the States, but we do. We had French payrolls out earlier. You see Italian retail sales were out. And as we move into the States, there's nothing to speak of as far as any type of economic data. There is consumer credit. That's at 3 p.m. Eastern, but that's let's see. I think I've been jumping the gun on that one. Hang on. Yeah, nothing here in the States at all for today. Tomorrow's when we get those payrolls out of France. and retail sales out of Italy. And tomorrow we'll get Bank of Canada interest rate decision. So probably a relatively quiet session to start out with. We're going to move here into the FX. So it says the euro challenged the 1908 level on Friday with the softer non-farm payrolls. Resistance for Tuesday is going to be 1933, although you can see here we're trading really quiet. But that would be the next key area here if we can push above that. So as I said, beginning of the week, although we had Labor Day off in the States yesterday, but the next key area, you'd go right back and say, well, we're right, still 1908. But if we push above that as the week rolls on, that next key area is going to be 1933. Actually, oh wow, we did already have that here, getting into Fridays. So we'll leave it at 1934. With support then is going to be 1845. Moving on to cable. So cable pared back slightly from its test of 38.78. You can see it right here on Friday. Immediate support will be 37.97 with resistance at 39 even. So we're going to have 37.97 for support. And resistance will be 39. And it looks like we're starting to see equities come off a bit here. Yeah, see how we're getting breaking lower here? You can see it more pronounced on the 15-minute. But that's what I'm talking about, is that it looks like we got the peak above, and now we're not able to hold it. We're starting to pare back a bit here. Getting back to cable, and 39 even would be the resistance. And moving on to the Aussie dollar. So the Aussie managed to close the prior week above the weekly level of 74.27. We know how key that is. That's been a huge area here. See, going all the way back. Look at that. So the Aussie managed to close the prior week above the weekly level of 74.27. Resistance for the week will be 74.89 with support at 74.04. So we're dipping back there towards that support that we're looking at, 74.04. And 74.89. Let's go and move into the dollar yen. So the dollar yen continues to languish in the mid 109 to 110 area. Resistance remains 1022 with support for the week at 911. We did have our stretch here for 1030, but that key one's been 1022. And support's going to be just a little bit lower here than we usually would look for. But that's for the key for the week, 911. And on to the cash dollar index. From early last week's bearish engulfing bar, we targeted a move to 92.03. And remember, here's that bearish engulfing bar we had, and we said the door opened up for 92.03, and that's where they went to it. They actually overshot a little bit. That was targeted a move to 92.03, where that was met on, said net, should have been met on Friday. Support to start the week will be 91.88 with resistance at 92.69. Overall, this, you'd have to say this still remains bullish. You see from here. Now, if it stays in this area, it could move to neutral, but yeah. And the same thing, the euro still has a long ways to go at best. So you could call the euro range at best, but it's just now starting to move higher. And even now, it's paring back a bit. With that, we're going to move into Bitcoin. Bitcoin's been one heck of a surprise. Bitcoin continues to power ahead with pullbacks limited to allow the market simply to catch its breath before the next move. You saw that here. Look, you get this move, we kind of sat here, and then we just relax, and then we just take off again. We sat here, we just allow the market to catch its breath, and we take off again. We come back, allow the market to catch its breath, and come back. There's not any real sense of a pullback here. Resistance ahead is going to be 53,251. We just almost tagged that. With the market, we supported 49,957. And support is 53,251. This market has really gotten going. And with that, we'll move into the S&Ps. So S&P futures continue to push higher on a near daily basis. Resistance will remain the same as last Friday, which was 45.53. So we're going to keep that the same here. Support will also remain the same at 45.14. And as I mentioned here, you can see here how we've been kind of pressing towards this upper area of the 45.45. Especially more recently right here. We finally got that peak above on Friday, but we just weren't able to hold it. And we've since gone and pulled back. And I don't think that the market is bearish. It's not bearish by any stretch of the imagination, but it may have to go lower over the next few days to find value. And we'll see how today plays out. But it's, like I said, we've been bumping up against bump. Now you finally get a chance to push through it. And we come back here, they get one more push, and now we just can't seem to hold this. So really opens the door for them to, unless you find new buyers to push outside of this area, I would think I'll have to come back in to find value. At least that's my outlook as the week begins. Take a look at the NASDAQ. This can be the same thing here with the NASDAQ. You can see here it's a little bit more pronounced with the NASDAQ because we pushed up to this 15,676. We paired back, made another solid run here, paired back, came back, like, oh, this thing's going to pull back. It did pull back a little bit, but we come right back. They can't stop it. And we saw a pretty good move on this day here. Look at this. And on non-farm payroll, and then we just start pushing. So then anybody that was trapped, they were trapped, and they pushed higher and really knocked those people out of their shorts as we began to push to new highs. Wasn't much that they could do about that, and so we come up here, but we haven't been able to extend beyond it. We're starting to pull back. Now, like I said, we haven't failed enough other than just pairing back within 15,676. But once again, unless we can push well above this, and individual NASDAQ stocks, I mean, the key ones like the Fangman plus T have held up very well when actually I think Apple closed another all-time high. So once again, we'll have to see how the week, I don't think today is a day to look at to see exactly how they react right off the bell as we come back from Labor Day. But I think the next couple of days will be quite key to see how this market sets itself up. Unless we can start to launch further, because we've had such an extended move, then they may have to go lower, as I said, to go and find value. So resistance in the meantime is going to be right there, 15,702. Just call it 15,705. What was the old high right there? 15,710. And support 15,577. At least initially speaking. Moving on to gold. So gold posted its best close in nearly 3 weeks. The shiny metal still requires a close above 1865 to generate real sustained buying. Yeah, we popped up here, but look, we've turned around and given back all these gains here. Hence what I mean by for sustained buying, not buying that you turn around and fade it into. So 1865 still remains key. To me, it means nothing. In between is nothing. And that's what I said last week, which is has translated to it. We pushed higher and look, it didn't mean anything. Just let it slide back. The only difference is now we are moving the support up to 1812. Just from a technical standpoint, they seem to be holding up really well. That might even dip down to 1808, but 12 is going to be key. Well, I guess that's a pretty big jump from 1794. So we'll make it the 1808 right there. For a little bit of push because they may have trapped some longs here, some new longs. So we'll go as low as 1808. Doesn't mean that 1802 because we had 1792. So they may, if they languish here, they could press some new longs or knock out some new longs to dip below that. But we'll go with 1808, sticking with this area to purchase here. But if you look at it here, you've got this range here that could equate to them getting really faked out. We trade in here, we hang around, and then maybe we take a dip and we end up sliding into the towards that 1792, maybe even 17 high 80s. But at least for now, we'll stick with go with the 1808. I just don't really believe in this market. Moving on to crude oil. So crude remains capped between $70 to $71. The crude will require a daily close above 71.65. I think we can see this. I think that's wrong. That is 71.15. But when I looked on a daily, it would actually have to close above 71.65, which should actually be right there. You see here? But I was looking at a daily. I wasn't even looking at the 2-hour chart. But you can see how significant 71.65 would be. You can see that coming across here. See that? Look at that. You would have to close above 71.65 to get a new leg up. We've already had a pretty good run here. Here, look at that little level I had marked off from previously. Wow, and that came in at 70.47. I think last weekend, not this past weekend, but the weekend before, when I was seeing whether it would jump up, I said it may squeeze itself up to 70.47. Well, we did, remember, we got just above 69.55 and fell back, but you can see the move above it ran out of gas right there at 70.47. So we would have to get above 71.65 on a close to generate new buying. You can see here, all we've done is turn around and dip back in here. So would require a close above 71.65 to extend this move. Support remains at 67.95. Well, 67.95 is the pivot. So we'll kind of stretch it a little bit to the downside if it slides, which we are right now. Immediate resistance, from where we are right now. Well, you can go back to the 69.55 essentially. But we'll give it a little bit more room. We'll say 69.86. And this shouldn't be bearish. I mean, I don't know if you can turn around and say it's bullish. It's had a pretty good bounce back. Yeah, because this is at best, it's neutral because it's falling right back in that range. So we'll go with range. There we go. And gold, I guess we can say it's range because it's bounced back, but it's obviously fallen back, but we'll say that's range. And there we have it. So there's the bias chart. I think that week will probably start out a little bit slow, although I think that we're going to might start out a little bit under pressure here, but that may not be right from the open. I think we just have to let it play itself out probably through the first couple hours and see how we hold up. But I think we've had such a move. I don't think it's going to try and fall apart, but we may have to ultimately go lower to find value. But thanks for joining us here on the European Crossover webinar. I'll get this posted and have a good session.